remember, when it comes to technical analysis, the thing about TA that's so important is that it's not a guarantee, right? It's giving you an idea of past performance, what it could potentially lead to in the future. But that's not what TA is about. The reason TA is so important is because so many other people are also trading off that TA. So it can give you an idea of where other people and other investors and other traders are looking to enter and exit positions based off that. And that's why TA can be important. We need to do a little tutorial on TradingView. For those of you guys who watch me use TradingView here, I've been using TradingView on stream for about 2 years now. TradingView, obviously I use because it's easy, it's free. You can upgrade to different levels. Different levels give you more access to different indicators and allow you to have more indicators on there. So there is a ton of stuff out there that you can use. So what I wanted to do for those of you guys, especially that are new, is I wanted to go over what I use on stream, what I use off stream, and how to utilize those, especially for you guys that are into TA or learning it. So the first thing that I'm going to go over is I have YouTube videos on it, but I'm going to go over it anyways. Everybody here knows what the candles are, okay? So your candles are basically what, the price action is, where the price started in that time frame and where it ended, either high or low. Green is up, red is down. You can change these to 1 minute, 5 minute, 1 day, 1 hour, whatever you want. So basically on this hour, it started here and ended here. And then the little wicks just basically lets you know where the highest and lowest of the trades were during that time. I'm pretty sure everybody knows that. You can always change this if you like it to hollow candles. You can do it to, lines if you want. You can do it into bars if you want. You can get the price action where the most volume was and whatnot. I personally like to use just candles because I've been using it the most, the longest that way, okay? For the longest amount of time, all right? So that's that. Now, as far as other things that I have generally, I like to use moving averages, guys. Moving averages are basically taking a time frame and giving you an average, right? So you take the candle. So I use on the 1 minute chart, I use the 2050 moving averages. So basically the yellow line is the last 20 candles and the red is the last 50 candles. And so what it does is it takes an average of those and gives you a direction, right? And so when you see this, you see the short term cross below the long term. That shows that the momentum or the average is moving to the sell side. And if it's the opposite, if you see the short term go to above the long term, then what it is it shows its buying signal, right? Now, I'm using 2050 because I'm doing this, on a 1 minute basis, and I like that. You go to your indicators here, and you can pick those up. You can pick up your moving averages in any way you want. You can do a moving average cross, and that way it basically tells you when it crosses, right? So it gives you these little signals right here when you see the cross happening, right? And you can have that. Some people like to use it. I don't, because I find that it just clogs up my my screen a little bit. So that's what it is. You can use your MA ribbons on your indicators. You got them in your financials and in your templates here. So I use the MA EXP ribbon. You can use your displaced EMA however you want. A lot of people like to use the 50-day moving average and a 5-day moving average, which is good for swing trading, right? Because swing trading is usually a couple days to a couple weeks. For long-term investors, people like to use the 200-day, the 100-day, and the 50-day, or the 250-day moving average. 50 moving average on something like SPY is very, very important. It gives people remember, when it comes to technical analysis, the thing about TA that's so important is that it's not a guarantee, right? It's giving you an idea of where past, where the past has led to, right? Like past indicators, past performance, what it could potentially lead to in the future. But that's not what TA is about. The reason TA is so important is because so many other people are also trading off that TA. So it can give you an idea of where other people and other investors and other traders are looking to enter and exit positions based off that. And that's why TA can be important. It's not a guarantee, but it can definitely give you, like I said, an indication to where those buys and sell points are. Okay, What else do I use? You guys always see MACD. Now I started using MACD here on stream a while ago because I love MACD to get an idea of where momentum is. I like to, you always hear me say I like to follow the money, right? I like to follow the money. Well, how do I know when the money's coming? Well, I'm using indicators, right? I use volume to see how many, where, the most action, the price action is, how many shares are being traded. Well, I get to find momentum because this is the MACD down here. Now it has moving averages just like we had here. So it gives me that indication of if we're moving to a buy signal or a sell signal. But more importantly, on the MACD here, this lets me know where the momentum is. So red is obviously sell momentum. Green is obviously buy momentum. The darker the green, the more that volume and more of that indicator is that it's strong momentum versus weak momentum, okay? You can look at MACD and you can look at it on a longer term scale and it kind of lets you know, like, see, we're in a very big sell as we never crossed into the buy side for a while there. And then as we start moving into this, you'll see that, right? So on the 1 minute chart, I like to use this because it gives me that idea of where that momentum is. And momentum trading is big. People want to get in and they want to ride the wave, right? They want to ride that momentum. So it gives you a great idea of where that momentum is and how it's moving, okay? All right, so that's what I use on my clean look, as it were. A few other things I like to use, guys, is Fibonacci. So Fibonacci is something that a lot of people use, and what Fibonacci basically does is it gives you an idea of where retracements are, okay? So when you see a stock moving, right? Let's say it's moving to the upside, right? And you're seeing it do one of these, right? Right? You see that, right? Like we're kind of seeing that right here. See, like a little bit right here, right? We're seeing these little upsides. So what this basically does with Fibonacci is it basically tells you where the likelihood of it bouncing back after retracing is, right? So you get buyers here. Basically what you're looking at, and let me do a little bit better of a line here, right? So what you do is you're basically, when you see a stock doing this, what this is you've got buyers showing up and it's bringing that momentum to the upside, okay? And everyone's watching it go to the upside. Then you'll notice it starts to sell off a bit. Why is it selling off a bit? Well, people are profit taking, right? But you're always looking for your entry point. You hear people in chat say, I'm getting in the next pullback. Well, what are they looking for? They're looking for where that pullback should stop. And then you see that pullback, and then buyers show up again, and then the momentum starts up again, and that's when more buyers start jumping in, and then you see that volume pick up, and you see it the continuation move up, and then you start seeing that pullback again, right? So you're trying to say to yourself, where is that entry going to be? How do I find where that pullback should go? And that's where your Fibonacci retracement comes into place, right? So what you do is you take a time frame. And what you do is you take your Fibonacci's, your retracement here, your Fib retracement, and you look for a high and low during a section, right? So let's say I take a 5-minute candle, okay? And I take a high and a low, right? So let's take Microsoft, for example, right? So if I were to take the Fibonacci, and you can decide what kind of candles you want, if you want to do it off the 1 minute, the 1 hour, the 1 day, and you can basically look at this. And you can look at a high, you can take a section, but let's go on the daily. That'll probably be better for me because it's a more understanding. So if we go on the daily here, I can take a high and a low on the Fibonacci retracement. And I can take a high and a low. I'm on high to low. I'm supposed to go low to high. Sorry. There we go. There it is right there. Okay. So when I'm looking at a retracement, what I'm looking at is valuation, right? So from the top here, okay, this gives me the 23, 38, 50, 61, 78 retracement percentage, okay? Now, why does this matter? Well, generally speaking, remember that line we drew, right? About with the retracements with the pullbacks, most of the time, now everyone who uses Fibonacci uses it differently, but for me, generally, I look at the 50%, okay? I look at the 50%. That's what I like to look at for a retracement. So you see here with the Fibonacci here, right? This is that 50% retracement. That's where I generally look for a bounce off of, right? And if I'm going in the future, all right, I'm taking my Fibonacci and I'm looking forward looking here. Okay, these are the different lines I'm looking at, depending on if I'm shorting it or if I'm buying on the long side. So when I'm looking for this, I'm taking this basic Fibonacci line, right, and I'm looking for that bounce. And generally, once it comes down to that 50% level, that's where I'm looking for an entry. Now, it's very difficult to do in this chart right here because it's Microsoft on the daily, but it's a good chart because I know a lot of people are trading it. So 50% on that retracement would normally be right in this area here. As we can see, it actually broke below. So what we're going to see is when it starts going back to the upside here, right? Look at where this bounce occurred. Look at your 50 right there, and look at this bounce here, right? We broke below into these different levels. So we ended up seeing a retracement off of that 78. We saw a retracement off the 61, but we saw the total reversal come off of that same 50, right? See that same 50 right there? Something very similar to that, okay? Now, obviously, it depends on the time frame you're looking at, and you can customize your Fibonacci retracement however you want, right? You can do it however you want, and you can use it to the downside as well, because sometimes you'll see these bounces on the downside, right? See these bounces, right? These can be indicators on where people are doing the same thing to the short side. So you see it to the long side, you can do the same thing to the short side, and it gives you those indicators, right? Now, like I said, it's just an indicator. It's a TA indicator. It's not an exact science, right? But it gives you a little bit of an understanding. So this right here went down, bounced up off the 50 right there, came back down, bounced up right off that Fibonacci level. You see that? You see how that's exactly where it went? So if you go there, it actually, a lot of times you'll see on the chart, it'll bounce off of those lines because there's other traders that are also using those fib lines, okay? All right. Last one I want to talk about is one that I utilize a lot more. I'm not a big Fibonacci guy because I don't really trade off of the retracements. I'm usually the guy who sells that causes that pullback retracement. That's usually where I play it. I don't usually play the retracement unless I'm playing a bounce for an entry, but not for exits. Now, the only other thing that I use, guys, is Bollinger Band RSI. I like Bollinger Band RSI because it does give me a signal on buying and selling, okay? So real quick, if I pull up Microsoft here, okay, and I pull out my Bollinger Band RSI. So I go into my indicators and I go into my Bollinger Band and my relative strength index, okay? I use these together in tandem, and the reason that I do that, and I'll show it to you here, is because I like to look for buy and sell signals with these. So if I go to the 1 minute, obviously 1 minute is a little bit more volatile, but we'll talk about it. The way I use these right here is I use the Bollinger Band, which basically gives you, when you hear somebody say something's channeling, right? You're looking at a channel. Well, the Bollinger Band gives you a general idea of where that channel is. And when it breaks above that channel, usually, unless there's full momentum there, that's a sell signal, right? And when it breaks below, that's usually a buy signal, right? So we ended up seeing it break below here and then move up, right? Then we saw it break above, and then we saw it flatline. Then we saw it break above here, then we saw it dip. Then it break below and up, so right? So it kind of gives you that indication of buy and sell. How do I tie that in with RSI? Well, I keep my RSI at 70-30. You can keep it anywhere you want if you want to be a little bit more tight on your scalps, but I like to look at it that if it breaks below the Bollinger Band and it's around 30, that gives me a strong buy signal, right? I see that RSI is low. I see it break below the Bollinger Band. That gives me that buy signal. And the same thing to the upside. If it breaks above that Bollinger Band and the RSI goes to 70, that gives me a sell signal. So look at it this right here, right? We saw it break below the Bollinger Band here, and we saw RSI under 40, showed a buy signal, right? We saw it break above here. RSI was only 60. When it got above the Bollinger Band and RSI was back to 70, we ended up seeing it sell, right? Same kind of thing here. Now we're seeing it break below the Bollinger Band, but RSI is still relatively high. Now, if RSI dips and we dip below this again, that'll show me another buy signal. And you can go back and look at this, right? Generally, you look at the Bollinger Band for when it breaks out below and above, because that just gives you where that channel is, that comfortable bit is. And then the RSI lets me know if it's undersold or overbought. Okay, so that's kind of things that I like to look at. Now, obviously, Bollinger Bands are the channeling of the moving averages here. Okay, but it gives a range, right? It gives a range, and when it busts above that range, too high, busts below, too low, I use the RSI as well. The only other thing I was going to go over, guys, was with my indicators here. I was going to go over volume profile. Now, some of you guys like to use volume on the bottom. I generally like that because I like to look at the time frame of volume and not the level of volume. But for those of you guys who like, you can do a fixed range or you could do a visible range if you want, and you could choose your volume, right? So I can choose a range of volume here, right? And it'll let me know during that range where the most trading took place. Okay. Now, if I want to do this on a 1 hour, you know, and I choose a different range, like from here to here, right? It's going to let me know at what range the most trading took place, right? So during this time frame here, the most trading took place right here. The most shares being transferred back and forth was right here at this level of 293.93. The second highest was right here. Now, obviously, that's the highest volatility of the day, right? So we're going to say, all right, we don't want to look at the highest volatility of the day. Let's take the 1 minute chart over the past, I don't know what time frame. Let's take for the last hour, okay? So we can take the last hour, and we can look over the last hour. The most trading has occurred on SPY, right? Or sorry, on Microsoft, right here at this level of 282.16 and above. So that means we're seeing a lot of trading in that channel, right? The second highest is on the low range here. So that's basically letting me know that based on the indicators we're looking at here, there's a lot of selling going on, right? There's a lot of shares being traded right here. It means it gets up here, or there's a lot of sell going on. And then when we get here, the secondary most is right here at 281.20, meaning that's where the most buying is. And I can use this to kind of set up my buy orders, right? I can say, okay, this is where all the trades are being at on the buy side because that's where we're bouncing from, and this is where the sell side is. So I can actually trade those range right there. Okay? All right. That, ladies and gentlemen, is a crash course in TradingView indicators that I generally use. There is a lot of other indicators out there that you can use as well. That was just a crash course in what I use, how I use it, and the way that I generally look at it when I'm using TA, which I used for buying and selling and entries and exits. Okay, so that is my my crash course. Obviously, there's a million others out there. There's other people that use the same ones in different ways, but that's basically what I was trying to give you guys an idea of. So I hope that helped anybody who was wondering what those do in a very, very watered down version. Okay. All right. And that's the show.